If you're worried about the volatility you are seeing in the gold market right now, my next guest says, fret not, it's all a question of seasonality. Please welcome to the show, Vince Lanci of Echobay Partners. Vince, long time no speak. Welcome to Stansberry Research. Welcome to the show.
Thank you for having me. Congratulations. And this is a great place. I know the work that comes out of here, and I'm happy for you. I'm happy to be here.
Thank you. And a full disclosure, Vince, for our viewers, I always consider you kind of like my underground source where, you know, there's periods where I talk to you every day and then you disappear and go underground. But you reached out to me recently because you felt that we were at a pivotal moment here in the gold market. And in terms of what we're seeing, and I know a lot of investors are writing to me saying, oh no, but look at these, you know, crazy fluctuations that we're seeing in the gold market. When's it going to be steady? When are we going to make higher highs? How do you see things right now, Vince?
Well, the recent volatility and, coming off the all-time highs, people are historically gold bulls get a little bit impatient when they don't have constant orderly rallies. And the recent volatility, which you alluded to, is a function of the politics that's going on. It's a function of, obviously, the pandemic, which is continuing. But something that is very important and endemic, I should say, for gold is that there is a seasonality. And you don't usually see seasonality in a commodity you would think that isn't grown or actually consumed. Gold is all there. But gold actually has an investor seasonality more than other commodities that kicks in between August and November every year.
Between August and November. So why is that? What's happening there?
Well, most companies, banks, they have their fiscal year end in December 31st, which makes sense. But a lot of hedge funds and speculators close their year out at the end of November. And the reason they do that is because they want to get a fresh start on the next year. And this creates a sell-off opportunity. Here's what I mean. The largest open interest contract historically is December for gold and silver. And that's because you have a lot of speculators who get in and you have a lot of producers who hedge their production. But what happens is because the December contract takes up such a large chunk of the year, 3 months, you have to understand that if you're a hedge fund or a large firm that closes its books at the end of November,
right,
going to be unwinding after August. And so the unwinding begins in the December contract, August, September, October, November. It doesn't happen necessarily orderly, but I'd say, I know that in 8 of the last 10 years, if you sold in August and bought in November, it would be lower.
Okay,
and
so
it's a function of speculators liquidating.
So I was going to ask you, as an investor, how do you play that with that knowledge? How do you position yourself now?
Well, if you're an investor and your investor is already invested, the first thing you should do is take comfort in knowing that a sell-off between August's high and November's low is not the end of the world. It's money getting in and money getting out. It's a flow trade, as we like to say in the industry. If you're an investor who's looking to invest, well, between now and November and Thanksgiving might be a good time to put some money in. That's what I invest.
Okay. And so you like physical gold, Vince?
Well, physical gold is ideally, if you're buying gold because you're concerned about counterparty risk, then physical gold in your possession is what you have to do. But I'm an active trader and I'm a macro trader. So I will use futures to express my opinions a lot, as well as ETFs. But physical gold is what you have for your core.
Right. So when you speak of this seasonality, is this unique to gold, or does it apply to, the other metals like silver, palladium?
That's a good question. The seasonality in all commodities, aside from growth and harvest, like in grains or natural gas, supply and demand, there is a seasonality in all commodities that are in indexes. And indexes or indices, they have an end of the year reallocation. And you will see seasonality August, November in most commodities, but you will see most pronounced in gold, silver, and energies. And the reason you see it in gold and silver so much is because there's really not a lot of crop issues or growth. It's not like gold rusts, or you have to worry about it being lost. It's not a food. It doesn't get consumed. And the reason you have it in energy is because energy is such a, historically, although that's changing, such a big part of commodity indexes.
Vince, I want to also talk to you about news that came out earlier this month about JP Morgan having to pay close to $1 billion in manipulation charges
Right.
relating to precious metals. I bring this up because this is a topic you and I have spoken about in the past,
Yeah.
ad nauseum almost. What did you make of that? Will that change things going forward? Do you have more trust in the system?
Um, Trying to be objective. First of all, I think it's worth noting that when this started to happen, you broke the article, the legal article, and you gave it to me to review. So we kind of double teamed this very early on before
Right.
it was trendy, and we kind of gamed this out. But to answer your question, so that's a hat tip to you for doing that. I remember that. That was a fun time. To answer the question directly about trust in the system, the answer is no. I don't have more trust in the system. And that's because, and this sounds a little bit vague, but because if there are companies that are incentivizing their people to make money at any cost, and there are laws that punish certain behaviors, then the people involved will adopt other behaviors to get around the laws. And by that, I mean specifically, you won't see spoofing in precious metals on a US-based company anymore. You'll probably see it in another division, maybe in Asia. You'll see it in an algorithm. It's really hard to process. It's hard to prove manipulation when you're using algorithms. You need to talk to the programmer, not the trader. So this is actually a big deal, I think.
It is a big deal. And I think a lot of investors maybe see that and say, well, if this is happening, right, how do I invest in that system? Is it a fair system? How do I win? How do I make money if I'm going up against this giant beast?
Well, I think the manipulation or spoofing or managing the markets is very detrimental to short-term price discovery, and it's very detrimental to people who trade and want to compete head-to-head with banks and large institutions. For investing, if you're talking a 5, 10, 15-year time frame, I don't think it matters much. The more frequent your transactions are, the more of a tax the institutions take out of you. So if you trade 10 times a day, they're going to make a penny on you 10 times a day. If you trade once a month, it's not going to put a dent in your.
And this goes back to your argument, which I know you've made many times, is, gold and silver, if you're trading, it's two different functions. Like you've always said, if you buy gold, it's more of a long-term play. Don't try and play that every day, correct?
Right. And I think the phrase I used to use is, and I still use is, although this is not something, gold, you can call gold an investment, but for me, it's not. It's money. You invest in things that you expect to create earnings, to throw off cash flow. Right. So unless gold is throwing off cash flow for you by lending it to someone, you don't buy it for that. You buy it as a strict hedge against buying power debasement. But then
I remember you've always said that it's fire insurance for your home.
Right. The other leg is, to your point, is the other leg is, it's also, and I say this more so than I used to, it's also a trading vehicle. It's also an expression of the emotions in the market, particularly gold. Silver is more an expression of the financial situation and the economy, as well as the precious aspect. So as trading vehicles, whether it be for 1 day, 1 week, 1 month, or even 6 months on a long-term trade, they're actually very good products. I prefer gold over silver, but yeah, there's two worlds. You either trade them or you own them.
I thank you for those thoughts, and I saw you were practicing a lot of restraint when we were talking about manipulation, Vince. So, because I know you, so let's just wrap with some thoughts for investors watching. Sure. Going back to your initial point of don't panic right now with the volatility we're seeing.
Oh, that's a good way to end this. Now, the seasonality that you see that drives the price of gold lower frequently between August and November, that seasonality ends in November. And what you will frequently see, and I've done the math on this, but I don't have it in front of me, is that gold will make its lows in November for the next 6 months. and then between December and February, it will rally. So you will see, because once the hedge funds liquidate,
right,
then the allocations come out, and then investors plow in again. So look for a rally after the new year to surpass all-time highs.
What are you, okay, all-time highs, let's make this your final point, your forecast when, you know, I've been hearing insane calls on gold, 10,000, 20,000. Where does Vince Lanci see it?
You know, I made a forecast once with you, and I got in trouble for it. I was off. I'm not a forecaster type. I want to say something that I think forecasting gold has no risk because there's no one to call you out on it. I think it's going to go to 10,000. Based on what? Based on the money supply. I think it's going to go to $1 million. Based on what? It's an opinion. It's an emotional.
Well, I can apply that to Bitcoin and other assets as well.
More
right.
so Bitcoin. At least gold is right. Exactly. Well, so I would not be surprised.
Okay.
I would not be shocked if gold went to $10,000 in 2 years. I would be surprised. So my comment is, let's get to 3,500.
All right.
Get to $10,000, and I will go out on a limb and say, if we make new all-time highs next year, I think we'll do it in the first 6 months.
Fair enough. We will end on that note, and I will check in with you and hold you accountable to that target.
Thank you.
It's always a pleasure speaking with you, Vince. Please don't disappear for another 5 years. We'll speak to you soon.
All right, Danielle, I will be around. Thank you.
All right. Fantastic. And thank you for watching this edition of Stansberry Research. We'll have much more for you. In the meantime, follow us on all our social media platforms, Twitter, LinkedIn, Instagram, Facebook. We are there. For Stansberry Research, I'm Daniela Cambone. Thanks for watching.